GRRR Technologies went parabolic this week after releasing their earnings report. This huge move means the stock has now gained more than 63% in the past month. When I called this stock out back in November at only $5, it was just starting its massive run up to its 52-week high. But now the company has given us a massive earnings report boasting 109% revenue growth and the promise of a lot more to come. But there is more here than meets the eye. So in today's video, I'm going to be looking a little deeper at the earnings report. If you've been following my GRRR Technologies videos over the past 8 months, or if you are a GRRR investor, then you need to see this. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. And I would really appreciate it if you could try to answer the question later in this video. Now let's get into it. GRRR Technology is a global solution provider in security intelligence, network intelligence, business intelligence, and IoT technology, providing a wide range of solutions including smart cities, network video, security convergence, and Internet of Things, across select verticals of government and public services, manufacturing, telecom, retail, transportation, and logistics by using AI and deep learning technologies. And its expertise lies in revolutionizing security and enhancing resilience, delivering products that harness the power of AI in intelligent video surveillance, facial recognition, license plate recognition, edge computing, post-event analysis, and advanced cybersecurity technologies. By integrating these AI-driven technologies, GRRR empowers smart cities to enhance efficiency, safety, and cybersecurity measures, ultimately improving the quality of life of residents. Now we can see that this is a truly global company with offices all over the world on every continent. So GRRR Technologies just reported their first quarter 2025 results, citing profitability, global expansion, and momentum, driving a 109% revenue increase. So let's look at the key points from this, and I will explain the good and the bad from this report, because this is being portrayed as a great quarter for the company, but that does not necessarily mean it's a great quarter for stockholders. Now, first of all, the stock has jumped over 63% in the past month alone, going from as low as $15 up to the current price of $25. So no doubt everyone who's holding the stock is delighted at this run and that the stock is up massively. But the earnings report does show some worrying things. So first of all, the key highlights. Exceptional revenue growth. Q1 2025 revenue rose to $18.3 million, driven by several mission-critical global agreements. A strong balance sheet. They ended Q1 with a healthy $33 million in cash, including $20.8 million in unrestricted cash. GRRR cut debt by $3 million. Their adjusted EBITDA reached $15.16 million, up from $3.5 million in Q1 2024, a 47.5% year-on-year increase that underscores GRRR's profitable growth trajectory. Adjusted net income also rose 46.7% to $4.47 million compared to $3 million in the prior year quarter, while adjusted EPS climbed to 23 cents, marking a sharp turnaround from a basis loss per share of $1.47 in Q1 2024. Now that bit is important. Remember that EPS is earnings per share. So if a company was to make the same profits as it did before, but they had far more shares, then the earnings per share would be less. And the same goes for making losses. If a company was making huge losses, but then there was 10 times more shares, the same losses would equate to the loss per share being 10 times less. The number of shares is so important when thinking about the EPS figure, so bear with me for a moment when we look at the actual financials of the company. Now it also says here that GRRR's pipeline now exceeds $5 billion, consisting of qualified leads where we have determined that there is a will and a budget to move forward and that we can close a deal within the next 12 months. And this statement from Jay Shandon. GRRR has launched into 2025 with power, precision, and clarity of purpose. This quarter is not just a performance milestone, it is proof of trajectory. Revenue is up, margins are firm, and profitability is no longer aspirational, it is embedded. With momentum on our side, we are no longer just building our pipeline, we are converting at scale, compounding growth across borders, and deepening trust with some of the world's most ambitious partners. From reshaping every infrastructure in Thailand to enabling climate tech at scale in the Amazon, Gorilla is fast becoming the default partner for governments and mid-sized enterprises looking to future-proof their nations. With a strong revenue pipeline and cash base, as well as our relentless operational focus, we are entering our next phase, one of acceleration, execution, and measurable value creation. So this all sounds great, but do the financials actually back this up? So here is the company's balance sheet as reported earlier this week. We can see that they have total assets of $155.7 million, which includes a strong cash balance of over $20 million. They have total liabilities of $56.1 million, which is largely made up of short-term borrowings and accounts payable. So I have no issues with this. This is actually a pretty strong balance sheet, giving the company total equity of just under $100 million, which is actually a little bit better than when I first talked about this company back in November when the stock was only $5. Bear in mind too that these financials, although they've just been released, these are from March 31st. So bear that in mind when we look at the end of the income statement. So this compares the 3 months ended March 31st, 2025 with the same period of 2024. Revenue has increased significantly, as we know, from 8.7 million up to 18.2 million. But look at the gross profit. They made a profit of $7.4 million on 8.7 million of revenue last year. Whereas this year, there's over double the revenue, but they've actually made less gross profit, with the gross profit figure coming in at 6.4 million. When we look a little bit lower here at the loss for the period, they have a loss of 4.5 million in 3 months compared with 11.5 million last year, which is a significant reduction. But we have to look at why is there a reduction here? And that comes down to this line here, fair value remeasurement of financial instruments. Last year, this was in here at an 8 million loss, whereas this year the loss is 1.8 million. Nothing else has changed much here, except for the currency exchange loss, which the company has made a note saying that this is due to the devaluation of monetary assets denominated in the Egyptian pound arising from the sharp depreciation of the Egyptian pound against the US dollar in March 2024. So at least that explains that. But look here, this is the important thing, the loss per share. There is a loss per share of 23 cents, compared with last year's quarter, which had a loss per share of 147, which on the face of it is a huge improvement. But look at the weighted average shares outstanding. There was 7.8 million shares last year, and now there is 19.4 million shares. So over the course of the past year, they have added nearly 12 million shares. That is a significant dilution. When I first talked about Gorilla Technologies back in November 2024, this company had a market cap of 53 million. But today, Gorilla Technologies has a market cap of over $500 million. Even if we look back at the shares outstanding on January 1st, 2025, and this here is a different filing, this is the one that was filed showing the full year 2024, there was only 10.5 million shares on December 31st, 2024. But in the 3 months from January to March 31st, they have increased the share count from 10.5 million up to 19.5 million. This is a company that had announced a share buyback scheme to reduce outstanding shares, but instead it has increased significantly. As recently as January, they increased the share buyback scheme to $10 million, but instead they have increased the outstanding shares by millions of shares since then. But this is my main issue with all of this. Since January, the stock has traded above $15 per share 99% of the time. It's even gone as high as $44. Even at $15 per share, the additional 10 million shares that's been diluted would equate to $150 million worth of stock sold. But where has the money gone? The earnings report shows cash and cash equivalents at December 31st of 21.7 million. By the end of March, this is 20.8 million. Total assets have increased from 153.7 up to 155.7, a 2 million increase of total assets. So shareholders have been diluted by a massive amount, and in the exact same period, the balance sheet has not changed. The outstanding share count has increased dramatically, but there is no benefit to this that I can see in the accounts. And GRRR have been saying that they have billions of potential revenue in the pipeline ever since I first seen this stock. Even in my last GRRR Technologies video back in April, I went through the short seller report with a very open mind, giving the company the benefit of the doubt. I said at the time, once we see their upcoming financials, then we'll know the truth for sure. But what I see here is a $500 million company doing $18 million of revenue in 3 months. Not the $50 million company that I seen in November doing $74 million of revenue in a year. Of course, I don't like to compare 3 months to 12 months, but if we were to annualize the 18 million of revenue, that would be $72 million per year. Not a whole lot has changed since last year, yet the company's value has increased tenfold. But guys, what do you think? I've seen some people saying online that GRRR should be $40 or even $50 per share, but I just don't see it anymore. In fact, I'm not sure I see any value here at all anymore. Let me know your thoughts in the comments below.